Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about whether the market is risk on or risk off, as well as that, the reasons behind the current predicament the market is seeing, and also to have a chat to you to get yourself ready for next week. But before I do all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, here's the question. Is the market risk on? No. The answer is no. A definite no. It is risk off. In fact, yesterday, the market experienced its worst day, worst trading day since September of last year. Now, one of the catalysts of this, one of the reasons for this is NVIDIA. Because even though, like I said, they had positive earnings, we all know they had a very good 2024. And initially their forecasts, which is what the market really looked at, was actually quite positive. And it was actually quite encouraging. And we saw yesterday, it had a bit of a relief rally. But then, like market often does, or investors often do, they dissected the earnings a little bit more. And they looked at the profit margin forecast for quarter one. And the forecast was 71% versus 75% expected. This meant that NVIDIA's share price dropped by 8.48% yesterday. And they weren't the only ones, because they then tend to track the rest of the market with them. Because you had Meta down 2.29%, Tesla down 3.04%, Microsoft down 1.80%, Google down 1.57%, Amazon down 2.62%, Apple down 1.27%. So where the Max 7 was looking for NVIDIA to give them a bit of a boost, because apart from Meta, they've all had a really bad start to 2025. Instead, NVIDIA added to their pain. But they weren't the only things which suffered yesterday. The S&P continued its losing streak. I mean, currently, I'm having a quick look at it now. I'll bring my chart up in a minute to share it with you, good people, obviously. But, it's experienced 6 days of losses. In fact, this week, the S&P is down negative 4.45% this week. Now, I did do a broadcast last week when the S&P was only last week, 7 trading days ago, that the S&P hit an all-time high. And I did a broadcast last week. Go back and check it. It was, I think it was called S&P hits an all-time high, but is it back to give vertigo? Well, we talked about this. I mentioned whether or not the markets was kidding itself. And it looks like sort of the reality is kicking in just a little bit. Now, let's have a quick look at NVIDIA and the S&P, how it's opened at the moment. So let's just pull my chart up. So this is the S&P. Currently, this is on a daily. As you can see, we've had 1, 2, 3, 4, 5, 6 days of losses. Okay, there's a slight little bounce at the moment, but to be fair, the market's only been open for 46 minutes. we look at the NASDAQ is the same. Again, 6 days of losses. If we engage how the market is currently feeling, let's look at the volatility index, the VIX, which is obviously a fear indicator. You can see, again, we're trading at 21.38 on the VIX, showing that there's a lot of people buying put options against the S&P. That there's a lot of sentiment or negative sentiment at the moment. We have a look at NVIDIA. Again, look at this drop yesterday. Like I said, they dropped 8.48%. And you can see that across the board. So they were looking for a savior, and they didn't get one with NVIDIA. But again, it's not just that. We have risk off across the board. And one of the things we have to talk about is the fact that the Trump crypto excitement is over. Is over currently. And don't forget, when Trump won the election, Bitcoin skyrocketed to the all-time high. Why? Because his administration was going to bring in, loosen regulations against the crypto market. He wanted to make a crypto reserve, etc. But the reality is kicking in a little bit. It's not happening as soon as it is. Like I say, reality really is kicking into one of the most popular Trump trades, because when he won, that was one of the biggest Trump trades. In fact, Bitcoin is actually 25% down from its all-time high. Now, it's not just because the excitement's over. It's obviously because of something else, which I'm going to talk about in a minute. But before I move on to that, let's have a quick look at actual Bitcoin, see where it is at the moment. I mean, we are looking at pure risk off, people. We really are. I mean, like I say, okay, it went down as low today. It's what, 77,000. Remember, it was, everybody's thinking, oh my God, this is it. It's going to go to like 150,000. That's now, it's low at 77. It's retraced a little bit. It's back up at 82,000 currently. But again, you can see total risk off. It also didn't help that Ether got hacked, and I think they lost 1.5 billion got hacked from them as well. So that obviously hasn't helped the sentiment for cryptos as well. So that's damaged it. But that's the thing there. Anyway, let's go on to the other story. The other reason why the market is feeling the way it's feeling at the moment. And this is Trump's favorite word. It's tariff threats. And what we're seeing is tariff threats are resulting in a stronger greenback, US dollar, a lot stronger greenback. We'll look at the majors, and we'll look at the cross where the dollar is gaining strength. And because don't forget, he's going to do 25% tariffs on Mexico, Canada, EU for automobiles, pharmaceuticals, easy for me to say, steel and aluminium, and he's going to do an extra 10% on China. So this is also really, 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 really scaring the market as well. It's tariffs, it's dictating everything. Trust me, I'm sick of talking about it. I wish the market would find another story, but it can. This is the story he wants to go with. And of course, obviously, this is the big thing which is driving the market. So let's have a quick look. Now, before we do that, there's another thing I want to touch on before we go and look at the dollar against the majors. There's another thing I want to touch on as well, again, which is not helping the market at all. And that is core PCE and price index was announced as expected at 0.3. There was no surprise there. Now, what does that mean? Now, obviously, don't forget, this is, again, it's an inflation indicator, which sort of measures the consumables, the change in price of consumables by the public, not including food and stuff like clothing and things like that. That's what it includes. And it came in exactly as anticipated, meaning that the Fed is likely to stand exactly where they are. They're not likely to move or change their way of thinking when it comes to interest rates. So they're going to stay where they are. So again, that's not boosting the market, because don't forget, the market was disappointed anyway. They had hoped they would expect lots of rate cuts this year. Remember, at the end of 2024, the Fed said, well, no, we're going to hold fast, stay steady. And that's what they did in the last press conference and the last interest rate decision, because, inflation is slowly creeping. We're going to stay where we are. Okay, the job market, which is not looking so strong, really. Well, we'll see next week, with US initial claims obviously rising to 242,000 yesterday. But we're going to stay at some fast. So again, this is disappointing the market a little bit as well, because we're not likely to see any change in the Fed's approach to interest rates as it stands. But anyway, let's have a quick look at the dollar. Just first of all, let's look at the majors. Like I say, we are seeing a stronger USD in general across the board because of that. I mean, this is what started yesterday. We started seeing dollar strength, and the market started rushing in. And as you can see, the euro is trading below it's trading around 1.04072. The cable is still trading below that majestic level of 126 as well. And gold as well, you can see, okay, even gold is suffering as money is rushing in to the yellow metal, currently trading at $2,836.87. So even my beloved gold is suffering because people are rushing towards the dollar. So, yeah, this is how we end the week by the looks of things. But you haven't seen anything yet. Get ready for next week. Get ready for next week, because we've got one hell of a week to come to us. First of all, Monday, EU CPI and US ISM manufacturing. But Tuesday, March the 4th, tariffs are supposed to start on Mexico and Canada, and China's increase of an extra 10%. That starts apparently on Tuesday. How will the market react? Especially come Monday, if Trump suddenly decides that he's going to delay it, like he did previously with Mexico and Canada. But that's supposed to start on Tuesday. So even if he delays it, it's going to be quite an interesting day indeed, and a trading week ahead of us. Moving on to not such exciting stuff. US ISM non-manufacturing PMI on Wednesday. And again, I think this is going to be an interesting one to watch. Friday, we have the non-farm payroll. Now, like I said earlier on, initial claims came in at 242,000. The last NFP was slightly under anticipated. So it'll be interesting to see this reading. If it comes in really low and the labor market starts really showing signs of strain, then of course, the market may then expect the Fed to, start getting in gear and dealing with interest rates. But we'll have to see. But that's a big one. But I think really, to be fair, it's Tuesday, or the build up to Tuesday. What will happen Tuesday, and how would the market react to it? That's going to be the big thing right there. And the other interesting thing I have, it's just, again, it's an interesting thing. I'm looking at the S&P again. I'm just chucking this out there. Okay. I see myself at a particular level. I think, because like I say, it's under 6,000. We've had 6 days of losses. I reckon if we get to 5,700, okay. Well, yeah, around that 5,700, okay. Trump may change action or may change course. And there's a reason why I say that. Because if you look on November the 6th, the day he won the election, or the day after he won the election, the S&P was trading around 5,715 points. Since then, we always had the Trump rally, and like I say, went to hit an all-time high. If it drops back down to that or below that, he might change course because he can't handle. He's got a big ego. He won't be able to handle that the stock market is lower on his watch. Lower on his watch. So he might change tack. So it'd be interesting to see. I think 5,700 level, maybe just below that. That is where we might see a slight difference. But that's an interesting. That's just off topic. Just want to point that out. I think that's the level I'm particularly seeing if he's changed tacks. Anyway, don't forget, of course, this is a live show. So you can ask me questions anytime you want, or come in with your own comments, your own opinions, exactly anything like that. Just share with me what you think, or say hello if you like. I mean, if you watch me on YouTube, you can obviously talk to me, I think, and the blog too, but maybe not on Twitter because you're watching me on Twitter as well. But I mean, and if you're not watching me live, by all means, you're watching the recording. Leave a comment below, and if I see that comment, I of course will reply to that comment next time I go live, which is every single day. Well, every single trading day, apart from Saturday, Sunday. I need to sleep then, but I'm live every other day. Every trading day, at least once a day. Okay, if there's no comments, don't forget, if you're indeed watching me on Twitter or YouTube and you like this type of content, by all means, give us one of these. It's nice to know that you like, or I love how I think on Twitter. It's nice to know that you like what we do. If you're watching me on YouTube, subscribe if you like, and hit the notification button so you know next time I'm going live. If you're watching me on Twitter, follow, by all means, because like I say, we have a live show at least every day. Anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. So I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.